Good evening, traders. U.S. equities closed mixed today. The Russell 2000 ETF was a standout, gaining 0.47%. However, the S&P 500 ETF declined 0.23%. The Nasdaq 100 ETF fell 0.2%. And the Dow ETF was down 0.2%. Equity futures mirrored this, with Russell futures up 0.44%, and the S&P, Nasdaq, and Dow futures slightly lower. The VIX fell 2.53% to 14.26. In the rates market, the U.S. 10-year yield climbed 1.19% to 4.7%, while long-duration treasuries fell 0.62%. This pushed yields higher. Commodity markets were active. WTI crude rose 1.37% to $82.36 a barrel, and Brent crude gained 1.58% to $88.45. This was driven by geopolitical headlines including a drone attack on a Saudi Aramco facility and ongoing U.S. blockade enforcement in the Arabian Sea. Wheat prices surged over 3% to above $6.70 a bushel due to Black Sea risks, following reports of Russian strikes on Ukrainian ports. Gold saw a modest gain of 0.21%. In FX, the U.S. dollar index weakened 0.32% to 99.65. The euro against the dollar rose 0.35% to 1.1571, hitting an 8-week high. Dollar yen saw a slight dip of 0.09% to 159.355. Key news included U.S. consumer sentiment dropping for the first time in 3 months, with the University of Michigan preliminary index at 51.8. Geopolitical tensions remain a dominant theme, with continued focus on the Middle East and Eastern Europe. Looking ahead, keep an eye on these geopolitical developments and the upcoming August 19 tariff deadline in the U.S.-Canada trade dispute. The desk should separate fresh catalyst from background commentary and wait for market confirmation before upgrading a theme. If the same story keeps crossing without a broader move, it remains context rather than a new trading signal. If rates, the dollar, commodities, and index futures begin to confirm the tape, the next brief should elevate that theme. Until then, the useful question is whether the headline flow changes positioning, liquidity, or the next scheduled risk window.